Okay, broader market update on September 17th here. So this is week 13. It was a bearish outside week. As always, full Cycles 101 in the description, links to that content. There's some written stuff, a video, and also previous videos or the previous video about the broader markets just to get some context. So again, I'll assume that you've gotten comfortable with the cycle stuff, so I'll use that terminology like daily cycle high, intermediate cycle high, weekly cycle low, etc. That kind of thing. So this appears to be a daily cycle advance that was 4 days long. These four candles, right? Very strong thrust up. And then we had this gap down. And you can see this gap between 40.85 and 40.38, right? And then we had some consolidation and then follow through. So Friday would be day 8 of this new daily cycle that theoretically started. Now, it's entirely possible that this is now actually the daily cycle low. And so this is actually day 62, right? So instead of this being day 4, it's day 55, 6, 7, 8, 9, 10, or excuse me, 55, 56, 57, 58, 59, 60, 61, right? So totally possible that we're actually getting a daily cycle low here on day 62 instead. What's important to note is that we have the FOMC announcement on Wednesday. They're going to have their meeting on next week, and they're going to announce their rate hike. The expectation is 75 bips. 75 basis points, but there's also, there are people assuming that you could see a full point. So in some ways you can imagine that 75 basis points could actually be seen as dovish, right? Like anything less than a full point could be seen as dovish. So a lot of ways that things could kind of spin. But we know it's going to be a big catalyst in the same way that the CPI was a big catalyst, we assumed. And boy, it was. Because that came out at 8:30, which is why you got this gap down, right? Because the number was just so, the reaction was just so negative. And again, we continue on this downward slope. So even if we did get a bounce here, right? Like, again, if you think about the potential, maybe we even make a little bit of another low on Monday. We could even go all the way here, maybe even fill the gap and then do something like that, right? And then continue lower. Of course, we could also just kind of make that move and then continue higher, right? But the question is, what is more likely, and how do we know that? One of the things we do is multiple time frame analysis. Let's look at the weekly chart. Like the odds on this, just look at this. We had this a pretty nice rally, right, off of this weekly cycle low. Very, very short weekly cycle at 16 weeks, this little thing. But also keep in mind, how far down did we go, right? So from this peak to this decline, it was a full 21%, right? It's rare that the broader market drops 21%, right, in a weekly cycle, right? So it kind of makes sense that it ended at 16 weeks. Then we had this nice little rally. What was the advance here? Just about 19%. Just under. And remember, the percentages, the way they work, you need to gain a higher percentage on the way back up to gain more ground, because you're getting it from a smaller base, obviously. And so this, again, you can see it visually, obviously. This is a lower high. This is a lower high than this one, which is a lower high than this one, which started the whole thing in January, right? And so as we look at this looks like it's another lower high. So this is a lower high versus this, versus that, versus that, versus that, right? Now, based on the way this candle is closing, you expect Monday will open somewhere around here. So probably an inside week. But also also the odds, like you could say 50-50 inside week, or maybe even open as a new low, right? You can imagine a gap down, the negative news swirling around over the weekend, different analysts, different banks trying to sort of out bear each other in terms of the downward projections. With the FedEx number, like there's a lot of bearishness out there in terms of macro. And if you look at the monthly chart, the logical place now, obviously, we have the June lows, right? We've got to get there first. That's in the 3,600 area. But then after that, the next logical place is that next sort of. This was your little area, two red months. This was after the COVID rally, right? We had rallied for 5 months, very solid rally off that COVID bottom, and then we had this ICL that ended up being really 2 red months, and this was a really ugly month because we had this rally that started out of a green month. We know whenever you see a big upper wick, you have to remind yourself that means that candle was green at one point. So this was a green candle. So this was a tough period, really a tough ICL. And so you can imagine that 3,200 area becomes a bit of a magnet. You're going to hear, I feel like a lot of people are putting this number out there. It's just a logical place. And you could see a world where that's where we get to around that 3-year cycle low. This March area is just kind of an estimate if you want to think about it that way. And I think it's a good way to play an options play, right? Like you take out an options play, March 2023, you can kind of define your risk. Start small, sort of layer in. I mean, right now, we are below the low from last month. That is literally the definition of making lows on the monthly chart. That's important to know about. That is very bearish. This interpretation would have us on on month 30. And again, remember, this low from month 27, which is June, is still in place, but it seems like it's only a matter of time before it gives way. And even that itself is like 200 points below where we are, let alone if we give way to 3,200. So this is the time when it behooves one to understand how to read price action for sure. And if we look at the other indices, it's really all the same picture, albeit important details here. Like so, Qs also day 8, same idea, undercut this low, but the Qs actually were able to close green, so outperformed the S&P 500 on Friday for sure. This is a very bullish close on day 8. And so again, very possible that this is actually your daily cycle low, and we're going to get a little bit more of a rally, something like this, but out to here. So that's definitely something that could be traded, depending on your time frame, obviously. But same kind of idea. Wow, in this case, we closed well below the low from the week before, so a big bearish outside. So what happened, and we talked about this in the previous video, we had a bullish outside weekly candle, followed by a bearish outside weekly candle. That's bad news. And again, best case scenario, we open as an inside week. Equally likely scenario, maybe leaning towards more likely, we actually have a gap down opening. Doesn't mean we can't reverse. I could see a world where we even reverse and it starts to look like we're going to make a bullish outside candle. So that would be a bullish outside candle followed by a bearish outside candle, potentially followed by a bullish outside candle. I don't know. We'll see. It's entirely possible, but that kind of volatility, that kind of queasiness, that's what you would kind of expect at this kind of big inflection point that we're talking about. Again, the Fed needs to continue to jack up interest rates. So that announcement on Wednesday, that press conference is going to tell us everything we need to know, how hawkish the Fed wants to sound, and we'll see the reaction to the markets have, obviously. And again, this is your monthly chart. Bad news bears. IWM, same idea. And we talked about this in the previous videos. IWM was still a green monthly candle. Now it's no longer green. And that's a good way to sort of define your risk as you think about, well, the gravity is going to pull IWM down at some point. And so this was a great put play, right? And you knew you'd get to at least a red month. So you had a target, and obviously you can kind of open up some liberties there to give yourself some room on either side. And in this case, we closed as more of a doji kind of dragonfly-ish ugly thing. didn't close the gap. So that is important to know about. At some point, we're going to get a rally. And no matter what, whether it's bearish or not, at some point, we're going to get a rally. And so this gives you a little bit of a target, that 180.54 area. At least if, we could even kind of test that area and then, make another lower low. But that gives you some kind of notion. And again, same idea. Week 13, the weekly cycle decline continues. We would expect, again, just to be kind of clear here, we did something like that, and now you did this. We've done this. We've done this. You'd expect something like that, right? So we'll see. And so that's how the major indices look to be playing out. And we'll finally just kind of really quickly look at the Dixie. Right, so the Dixie looks like it's having trouble itself, kind of consolidating here after this big bullish candle on the CPI day. It's been consolidating for the following 3 days. The monthly candle still, or this is the weekly candle, it made a new low, did not complete the bullish outside pattern. But that's going to be interesting to see if we get follow through, because we can essentially get a compound bullish outside candle bar, or a bullish outside candle is a way to kind of think about it. And again, month 20 of the 3-year cycle, that's the only thing that really matters at this point.